Good morning, it's Harvey Jackson from Produce Profit. Just going to go through top news items here today. Politics has been the main thing that's been in the news this week. We've seen a bit of a rally on soybeans, and some of that's because of the Argentina dryness, and just announced that they are actually going to change some of their tax incentives as well. I'll touch on wheat as well. If you like these videos, just subscribe, of course, and we'll try to keep putting out some content for you. So Trump did not attend the Davos meeting in Switzerland, or the economic forum, but he did do it virtually. And again, just bringing up all of his topics since the campaign trail and everything. But you know, tariffs being the main part of his business model, really encouraging drilling, and trying to push down and encourage Saudi Arabia to actually invest even more and start pumping out more oil to put a squeeze on Russia to end the war. And I don't know if he realizes this, but the previous administration actually put on a price cap, and that's where I think the price cap is at $60 a barrel. So you're basically going to have to push oil down below $60 before there's any pain on Russia. But maybe he needs to read into that a little bit more. Um, he's actually suggested that all NATO nations move up to 5%. And he's also talking about Canada here as well, where we have a deficit and he doesn't need our oil, lumber, and other goods here as well. So Rollins got through the vetting process to be the ag minister in the U.S. And she just mentions in here in some of her questions that if there's retaliation on soybeans, that she's going to be supporting the farmers with some additional funding. Here's a real donkey, and he's packed my bags, but I wish they would actually maybe talk about going to jail. So here he's flip-flopping completely, this Gibault, on supporting anybody that had not supported the carbon tax. So all of these guys are just unbelievable. Politics is just taking all the air in the room, but we even have some Canadian politicians with their running. So he's supporting Carney and basically changing as he goes what he said in the past, and just liars. But that's what politicians do. Dollar falls after Trump tariff remarks could prove limited. So there's some limited tariff remarks for China. So that's actually kind of supporting the market here a little bit as well. And another article, and so see, Trump seems to be following and some of his script, and he's actually quit funding, basically walking away from the World Trade or the World Health Organization. I think you have to give a year's notice, and he's cutting off all funding, and it's a fair bit of funding when you look at it. It's contributed 181 million just last year, so or 261 million, sorry, for 24 and 25. So that money is not going to be showing up in the World Health Organization anymore. Another guy that I follow on Twitter, Mitch Miller, he was just talking about yields. So long-term trend yields is higher, but when you look at since 2016, it's actually lower. You can see it in the blown up screen here. So he went all the way back to basically 2001 and until today, and you can see that there's a trend line going up. But if we look at the shorter term from 16 backwards, where we had the high yields, it's actually going down. So interesting. Argentina to slash grain export taxes. So they're going from, I think, and I should have maybe cited the article a little bit better, but I think it was 26% was what was normal, and they're moving it down to 18%. I could have those numbers wrong, but that is actually potentially going to push a little bit more selling from Argentina farmers, because they get taxed as they sell and as they buy products. A little bit different than what we see. Oil prices getting pushed down here. Palm oil is a little bit up on the week, but not much, and we'll see that in the charts here in a bit. So if we look at the charts here, or just what the market is trading, canola is down, let's call it $3. European rapeseed down 4.75 metric ton. Soybean oil is down. Palm oil is basically up a little wee bit, and crude oil at just below the $75 a barrel. And most of the wheats are down. Corn is down as well, and the Canadian dollar is slightly up as we speak. So if we look at canola, it's still supported if we're drawing lines on these things, but we're basically in the middle of the range. We're in the middle of the range on the Fibonacci retracement. We've got a little bit of short-term support with our short-term moving averages, but our long-term 200-day moving average is actually basically resistance and can't close above it at this point. So if we look at rapeseed, the price in Canadian dollars, it's $149 more expensive in rapeseed in Europe than Canadian canola. Uh, and I think I talked about these waves here, still above the line, and again, lines of support and resistance are subjective, depending on where you want to draw them, of course, as well. But still looks like it's supportive, and we did make higher highs from previous, but we are making higher lows as long as we can stay above these support lines, if that makes sense. Soybean oil, we've got this leg down. Looks like a pendant flag formation. So those are not always indicating which direction, but this pendant looks like it's going down. Palm oil, middle of the range, similar to some of the other oil seeds, but a little bit higher this week over last, and some of these moving averages are actually uh, uh, being a bit of a resistance point. Same thing with crude oil. It's down. Your diesel fuel actually has maybe had a bigger drop than the crude oil, which is good. Soybeans by themselves actually having a pretty good little rally here. Those guys that have got some options on, they'll be expiring today. We have long futures or short futures with a long short dated option. Those will just wash out, and there will be no trade at the end of the session. So we'll have to revisit that on Friday or on Monday, whether we want to get back into that position. Canadian dollar, this is where the Canadian dollar, this is the inauguration and the wild volatility that we saw, but this is just a short-term look from January 20th till today, just in a minute chart and where we are. I would not want to call bullish or bearish on this just by looking at that, because when we look farther back, that's basically not doing anything since December. Let's have a look at wheat. So spring wheat, nice long candle and a couple of down days here. Can't seem to get above some of these short-term uh, uh, resistance points that we made or previous highs. So what I did here is just drilling in a little bit farther. Where is the the highs? When did they come? And where were we trading in the fall? So you can see in this visual, it's basically 2.5 years, a little bit better. So you got early summer, late summer, early spring. So you don't know. Seasonality is I hate to use it as a perfect measure, but it does give us an idea where we are in the growing season, and what kind of weather in the world, and whether the market's going to rally or not. But we have to basically move above this longer term average before you can start to say that we're in a different cycle. Same thing here. So here's the different cycle that I'm talking about, is the market actually getting above that long term average. But this was 3.5 years. And you can see where the rallies are. Midsummer, spring, no rally at all. Early spring. So uh, if you're getting a sense here, you got spring, you got summer, spring, summer, spring. You don't know when this rally from the previous fall is going to actually happen. Uh, so here's the seasonality 15-year, and they've kind of put it all together, but it's still just be careful with it, because here we are right now in this timeline with the expectation there will be a spring rally, and I think you can call out a spring rally more often than you can call out a fall rally. So here's the pricing differential that we have uh, for fall. We're still looking to get to that $7. So 651 is the futures out there, still holding 45 to 50 cents carry in the market. Um, if we want to get some sales made there, that's a pretty good carry. So here's your hard red winter and your Chicago with some down days from a bigger up day, of course. And here's your French wheat, basically right in the middle of the trading range. But when we look at corn, well, this has actually had a pretty good run. We're starting to look a little bit oversold here, and and we're getting closer and closer to this $5 mark, which would be probably huge selling pressure, and thinking that might be the top end. So next month we have a stat scan, or February 7th, and February 11th we have the USDA S&D report as well. So chat with you later.